Good evening, everybody. Welcome to the Locke Your Success Trade and Market Update for July 5th, 2013. I'm putting this out a little bit early this week. I have a lot of things we're doing over the weekend, and I just want to get this out here and make sure you have it on time. Any information contained in the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and therefore we are not making specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event we are doing a computer simulated trade, the results are believed to be as accurately presented as possible. And always remember that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And as always, if you're watching on YouTube, please come on over and visit our trading blog at www.lockeinyoursuccess.com and take a look at our Rock M3 and Bearish Butterfly series, and we have a lot of new things coming out. I have a lot of things on the works, including the SSS trading series, and I have also a lot of smaller and beginner programs in the works also. So stay tuned for that. All right, let's start by taking a look at the markets. The Russell had a ferocious up move this week, and actually over the last 2 weeks. This week was about 25 points, which isn't terribly unusual, except it's right on top of a 35-point move the week before. If you add that together, it's 60 points in 2 weeks, and that's pretty aggressive movement there. So even though that was a very large move, it wasn't really anything expected. We planned on the market more or less staying in between our lower support level and our upper resistance level, and it did. But now we're pushing the upper side of this range. We'll have to see what happens from here. I mean, we may push up a little bit higher. Then I would expect some sort of a reaction or retracement off this line before we actually do break higher. I would expect this channel in here to hold until June expiration. From there, we'll have to wait and see how we actually do react to this resistance area. I would say, since the longer term charts are still bullish, then we have a better chance of breaking to the upside than to the downside of this trend line. So we'll see how that goes. But for now, we're still bullish longer term, very short term, the next 2 trading days. Like I said, I wouldn't be surprised to see a retracement down to the 990, possibly even the 980 level. Also wouldn't be surprised to see that in 1 day, because we've been seeing fairly strong reactions off of resistance levels. However, they've been very strong, but they haven't been very deep. So I would just be prepared for that. If you want to take a look at the SPX is short-term downtrending. We're coming into our downtrend line. We are still longer-term uptrending, and just like in the Russell, I would expect this new channel here that we put in here to hold. Any down move from here should be muted to the bottom end of this trend channel. And if we break up over this downtrend line, which I would be fairly confident we're going to do at some point, then we'd be looking at the line itself for a target for the short term. If we take a look at the NDX, we also had a fairly strong week and 2 weeks in the NDX. This is also a very, very aggressive move. However, we're no ways near our highs. And I didn't mention that the Russell actually closed at an all-time high. It was not an all-time intraday high, but certainly an all-time high close. So this is at all-time highs. The NDX, although it had a very strong week, is still well below its all-time highs, or its post-crash highs, I should say, because it was up a little bit higher than this back before 2003. However, this, from a relative standpoint, this is relatively weak compared to the Russell. And if we take a look at the Dow, we have the same thing. We have some downtrending. I would expect us to hold this channel here and probably reverse somewhere around this upper trend line. So possibly a little bit higher early in the week. Maybe not. We may just reverse off of this level. And I would expect any pullback, although it may seem very aggressive for 1 or 2 days, should level out and bounce higher from there. Okay, let's take a look at our trades. Because we did have such an aggressive move in the Russell, though, we did have a lot of adjustments this week. So I'm just going to start here, as usual, with the V condors. This is the August V condor, and the only thing that this got this week was because of the aggressive up move, I did end up buying back some of these 1050s. So this is back on Monday, and this is what we looked like here. Let me back this chart out a little bit. You can see because of the aggressive up move, we are pushing our upside delta a little bit. If we move this all the way to Friday, I didn't really have to do anything until today, and our delta was climbing too high. I ended up buying back two of these 1050s. The trade's still up a little bit of money, and it's looking like this. If the market move continues to grind up, that will be a good thing, as long as it's not too fast. If it's very, very fast, it can be problematic, but since we're up over 60 points, we're definitely due at least to slow down for a couple of days, and a lot of times that's all it takes in something like this. But right now, the trade's looking perfectly fine. And let's move on to the V Condor for July. Taking a look at this, the only thing I did during the week was on Tuesday. All I did is I sold off my July 1020 call. I sold off my long July 950 put. And the reason I did that is to bring my expiration line a little bit higher. And this is what the trade currently looks like as of today on Friday. I'm not too concerned about this outrunning the trade in the next 18 days. It would be an awfully big move to give us any trouble. So I'm just going to sit here and let this thing expire, and it should expire with a profit of around $3,800, which isn't a great month, but it's more or less an average month. So no complaints there. All right, so from here, let's take a look at the July M3, which pretty much saw the most action last week. Again, it's a flat delta trade, and we've had a pretty aggressive up move, and we are near expiration, so we're going to get that. If we go back to Monday in the morning, and we take a look at our position, we're currently sitting at 2 930 butterflies we put on when the market pulled back fairly hard. And from there we had to do some vertical spreads just to control our delta on the aggressive up run that we've been having, which is right here. On Monday, that up run continued. We ended up selling to, let's see, they were at 970, 990 puts. So by the end of the day, we moved these 970 shorts up to here by selling those two put verticals. And our delta came in the end of the day around minus 37. This is what our position looked like at that point. Really nice, healthy looking M3 trade. If we come to Tuesday, we did another adjustment. I actually did two of them. What I was doing with the continued up move is, what I wanted to do is punch this tent out a little bit wider so that we'd have more room under expiration graph. Since we're starting to come into expiration, I want to keep our theta a little bit higher above the position. So to do that, I bought 3 980, 1000, 1020 butterflies. And a little bit later in the day, I also sold 1 990, 990, 1000 vertical. And if we come to the end of Tuesday, or make it the end of Wednesday, because I wasn't done on Tuesday, it was done on Wednesday with a further up move, come from this position of having 6 short, 10 long, and nothing up here at 1020s, to having 3 short, and it should have been 4 long and 3 long here. However, I bought 990 put and sold a 1000 put, which makes me only 3 long here. And we closed the day at around minus 48 delta. And from there, we did nothing on Wednesday. And if we come to Friday, I ended up selling 2 980, 990 put verticals. And then I sold 1 980, 1000 put verticals to bring us to this position here. And if we take a look at our T-log, that was done towards the center of the day. We, as of 3:30, we were at about minus 44 delta. We're slightly over minus 50 coming into the close because we had another 5 points added to this in the last 15 minutes. And the position is up currently. It's actually a little bit higher than option view showing. It's even after the up move there, it's still up around 28, almost 3 grand. Here's what the position looks like here as of Friday afternoon. If the market continues to go up, we're going to continue to remove the risk over here and get what we can out of it. If we continue to go up, I'm guessing we're going to pull 2,500 or so out. If the market actually calms down a little bit and maybe settles back, then we should easily hit our profit target. possibly even exceed it this month. But we shall see if the market's going to give us that break or not. So that is the M3 trade for July. We also have the July rock trade, which got some movements as well. If you remember, we started the July rock trade as an M3 position, and as of Monday afternoon, I had actually turned this over to a rock position. So let's go into the morning. In the morning, this is what the position looked like. A really nice looking M3. I actually would have been better off right now, I think, had I held this as an M3, but I did not. I figured the market was high enough where it should slow down a little bit coming into this resistance area, and I wanted to position myself so that I would do well if we reversed off it. I'd do well if we stayed stagnant, and I'd still be able to chase the market to probably 1030 or so if the price decided to take off on us. And what we did here, if we run to the end of the day, I went into a position rock, 2/3 entered. Yes, we did end up, I did this around noontime, and we did end up picking up a lot of money by the end of the day, just because of the way the market movement ended up and the volatility that came out of the position. So this was done, let's see, today's the 1st, so we did this around 12:30, and pulled into this position here. I'll show it to you. And here we are with rock 2/3 entered. So from here, had we come up a little bit to around 1,000 area and backed off, I'd still be looking pretty nice. And if we went down too far, we would have rolled back these 970s. And when we go up, what we're going to do is going to start scaling into the 1030s. And at that point, I should be able to stay with a move to 1030 fairly easily, as long as it's not too aggressive. And if we shoot to today, I ended up adding 4 1030s, and the position is up now about $3,900. And this is what we look like here. You can see if we continue to grind up, we'll continue to add 1030s. And if we happen to close in this 1020 area or slightly higher, that'll be really good. If we start pushing over 1025, we're going to be forced into 1010, 1030, 1050 bearish butterfly. Not a bad thing necessarily, but I would prefer that we just kind of creep here up into this range around the 1010 area and kind of hold it. If we get a hard down day or really harsh pullback, then we'll be fighting this to the downside. But as of right now, everything is going well. Don't know that this will be a profit target month for this month. Depends on what happens from here, but it should be a positive month nonetheless. So it's looking pretty good. We also have our July bearish butterfly trade, which I decided to stay in past the 21 days to expiration, even though we were past our low profit target. We're going to try and milk this a little bit, although I'm not going to let it get too crazy. If we get too much more movement, or if the market stops making sense to me, I'm just going to pull the trade, and I should be able to get our $10,000 out of this for 20%. And if the market does actually behave a little bit, we may be able to get significantly more. So what I did with this, like I said, we decided to cut the delta down when the market started rising, and I would just kind of scale into this and start using expiration guideline. So when we look at this back on Monday, we're sitting here in 1/3 of a position, and everything's looking fairly nice. So what I'm going to do is I'm going to take my delta numbers. Since I'm in 1/3, I'm going to cut them way down to like minus 150. We're just going to start cutting our delta back to the upside or to the downside. And I'd want to be over my short strikes here. And then once we get 2/3 scaled in, we're just going to go fully into the bearish butterfly into expiration rules. Our scaling in actually started on Monday. If we go to the end of the day, we end up having to scale into 3 of our 1010 butterflies. So if we take a look here, I put 3 of these 1010s on. Probably should have put them in the call side, but I went ahead and put them in the put side. And I was just keeping our delta down to something reasonable. We did lose some money here because it was an aggressive up day. On Wednesday, I ended up adding 2 more of those because the market kind of hung up here and our delta was starting to increase and the market skews were changing. So I added 2 more of those. Let's see, by the end of the day here, we'll go right to the end of the day. I'm sorry, I didn't add any more of those. Apparently I let the market climb a little bit. I probably should have added a couple of more of these. I didn't do anything until Friday, which is today, and we added 2 more of those 10-10 put butterflies. So if we come to Friday in the morning, with the aggressive up move, I ended up, I still didn't do it as of yet, a little bit later in the day. You can see I added 2 more of these 10-10 put butterflies. And then towards the end of the day, when the market really started taking off, we ended up putting in 5 more of those. So now we're at 10 at 990. We're at 10 at 1010 at 330, exactly per guidelines on expiration guidelines. We're just about minus 250. By the end of the day, we were over this because we had, like I said, we had the push up in the day. But this was pretty much perfect positioning for what we had at 330. We shall see what the market brings next week. But this is looking really nice. If the market stays calm, we should easily be able to get our 30% profit target. If we start getting really aggressive moves, I'm just going to close it and get out because I just don't want to fight an aggressive move at this point. It's been a good month, and we just don't want to lose it. And last but not least is our August bearish butterfly, which is down a little bit of money. At 330, we were not over 1,000, and I did not add my last third in. We were over 1,000 by the end of the day. If we get up move on Monday, then we'll go ahead and add the last third in. If we get a big up move, we'll end up rolling this to 1,000 and actually adding 1020s. However, as of right now, everything is going fine in this. We're down money because, like I said, this is a fairly high negative delta type of a position, and we've had a very, very large up move since we put this on. So, if we go to the beginning of the week, just so that we go over the adjustments on this, if we go to the beginning of the week, we only had 1/3 on at 940. So we had 1/3 of the position in, 10 940 butterflies. We did have a delta theta ratio problem, and we did have that before our add point at 980. So what we did is we sold these 940s, we bought 960s, we bought into the 980s so that we're 2/3 scaled in. If you want to see the T-log, then I just kind of ended up doing this midday just because of my schedule that day, and there were no further adjustments on this. And this is how we sit as of Friday afternoon. Like I said, we've drawn down a little bit, but nothing to be concerned about on this type of a trade. All right, those are our positions, and we're expecting the markets to back off a little bit and then continue higher. I hope everybody has a fantastic weekend, and we'll be back in touch next week. Thank you, and good night.